Let's keep it simple as we break down the US stock market basics. Hey, what's good, YouTube? I'm Royal. Welcome to Royal's Mindset, where I'm documenting my wealth building journey. And in this video, we're talking about the US stock market basics. All right, we're going to keep it super simple for beginners that want to understand how the stock market works. All I ask is that you hit that like button and subscribe. It's the most free and simple way to support this channel. So what is the stock market? What is this thing, right? Well, it is a huge auction. That's how you can look at it. You can look at it as an auction of buyers and sellers. And the buyers are what they call bulls. And usually when there's more buyers buying a specific stock, the price will go up. And when there's more sellers selling a stock, those are the bears. When there's more people selling a stock, that's when the price will go down. So it's really just an auction of buyers and sellers. Number two, what is a stock? Well, a stock is like ownership of a company. When you buy a share of a company, let's say for Apple, since I'm an Apple employee currently. So when you buy a share of Apple, you are buying ownership of that company. So when that company grows and it profits, the company shares its profits with you, the shareholder. Number three, how do you make money? Well, making money in the stock market is pretty simple, and there's usually two ways to make money. Is when the price appreciates and the price goes up, you make money that way, as well as dividends. And dividends is when the company shares profits with you in cash. There's some companies that pay monthly, and then there's some companies that pay quarterly 4 times a year. So these are usually the two different ways that you can make money with stocks. Number 4 pro tip for beginners, start with index funds, not individual stocks. Now, when you're just beginning learning how to buy stocks, learning this whole stock market game, right? You want to buy index funds. Index funds are usually a basket of stocks. So you got a bunch of stocks in there. You got the Microsofts, the Nvidias, the Apples. You got some different companies from different sectors of the market, and you're pretty much like buying a bunch of different stocks under one roof. So this is the easiest place to start if you're a beginner investor. It's more safer to put your money in an index with a bunch of different stocks, balancing out your risk instead of just going it all in on one stock, hoping that that stock goes up. Number 5 is you should only be investing money that you don't need. This is money outside of your savings, outside of your emergency fund, outside of your bills and your rent. You should not be investing your rent money. You should only be investing money that you don't need. Money that you don't need, or money that you don't mind losing, because there is risk in investing. Number 6, don't try to time the market. They actually did some studies years ago on people that got the best returns from the market. And what they found out is that people that were dead, number 1, or 2, forgot that they even had an account with their stocks. These are the people that got the best returns, that made the most money. It's less of a headache to try to time the market. It's so much easier to just dollar cost average and putting money in either every week or every month without riding that emotional roller coaster. Number 7, what is diversification? Well, I'm sure you've heard the phrase, don't put all your eggs in one basket, right? Don't be trying to hit that home run swing. It's easier to put your money in different companies from different market sectors, so that if one company does bad, the other companies in your portfolio can balance the risk. Everything's about balance. Everything's about managing your risk tolerance so that you don't lose money. hit that like button as we move forward to number 8, risk versus reward. Now you have to be careful with stocks. Like I mentioned, there is risk in all stocks. And there's some stocks that are more riskier than others. There are some stocks that are very, very safe and boring. Now, of course, the more riskier stocks, you can make more money, but you can also lose more money. So just be careful. Pro tip number 9, long-term mindset. There's a quote that Warren Buffett said about, if you wouldn't own a stock for 10 years, then you shouldn't own it for 10 minutes. And this is when it comes to just thinking long-term, thinking years down the line of solid companies that have been around and that most likely will be around. The idea is to buy a company and to get future returns on that company. So think long-term, think years in advance on how much money you're going to make from each dollar you invest. And last, but definitely not least, I probably should have had this as number 1, but you have to invest in your own education, your own knowledge, your own understanding. You see, God put your brain in your head so that you can use it. And the best investment you can make is in yourself, because the more knowledge you have, the more options you can choose from, and the more power you're gaining as an investor. All right, the more you learn, the more you earn. Very, very, very true. So these are the complete basics, 10 pro tips so that you can understand the US stock market. I'm still somewhat a beginner. I'm just a little past my 2nd year of investing and trading. And if you want to follow my investing and trading journey, feel free to hit that like button and subscribe to the channel right now. And if you want to find a more in-depth video, I found this video by Wall Street Trapper. You want to watch this video next, because he breaks down a little bit more of the history of the stock market, and he goes just a tad deeper if that's something you're interested in. But this is everything you need to understand the US stock market, the basics, and how to make money.